Welcome to Libertex. In today's video, we'll be going over perhaps a more overlooked trade of 2021, copper. Copper has been a fascinating market to look at and is up nearly 110% year to date, approaching highs not seen in nearly 10 years. The bull run for copper has taken many traders by surprise, and some are viewing it as a potential sleeping giant that could have more room to run. Stay until the end of this video, as we'll be diving into the technical charts to get a better look at how copper has been trading recently, as well as the nearest levels of support and resistance to watch out for if you are considering entering the market for copper. And if you'd like weekly videos from inside the markets, covering the biggest movers and breaking developments from the world of metals like copper, silver, gold, as well as the top crypto movers and stocks, consider supporting us by liking this video and subscribing to our channel to join our growing community of traders and investors. So without further ado, let's jump into the copper price analysis. The fundamentals have been increasingly strong for copper, which has been strengthened by the lower price of the US dollar as of late. Similar to gold and silver, copper also has a history of trading inversely to the dollar, and since last year, the markets have seen a steady climb in the price action for copper. Goldman Sachs has come out with a prediction that copper will see prices around $11,000 per ton, an increase of about 18% from current prices at around $9,350 a ton over the next 12 months. Going further, Goldman Sachs is predicting that copper prices will eventually reach $15,000 per ton by 2025 in a report titled "Copper is the New Oil." More so, the report claims that copper will be the most cost-effective metal to be used for the production, storage, and transportation of a surging renewable energy sector, and will be necessary to meet the demands of the Paris Agreement to reach climate goals. The new focus and emphasis on the strong policy outlines of the Biden administration over green energy could create significant price action for copper. For example, the Biden administration has stated it wants to greatly expand access to electric vehicle charging stations, replace every lead pipe in the country, and accelerate high-speed internet access. To do this effectively, copper will be a necessary component. The forecast for copper, seen by a growing number of analysts, is one that is constrained by decreasing supply and increasing demand in the wake of a post-COVID global economy. In order to achieve these green policy goals, copper will enter a demand environment, which by most accounts it is not prepared to do. The uptick in demand has so far shown little change to expanding copper mines or creating new ones, and political turbulence in key copper supplying countries may further squeeze supply to push prices higher. Peru, the world's second largest supplier of copper, will have a presidential election in June, and one of the strongest contenders to replace the current president has made bold claims about nationalizing the nation's copper, silver, and gold mining activities, which could shake the markets and increase prices. While there is a big potential for a supply squeeze on copper, at the moment this is not fully realized. Expansion of copper mines can take up to 4 years, and the creation of new ones can take up to 8. For this reason, copper is known as a long cycle commodity, which is one of the greatest reasons why Goldman Sachs believes the price of copper could see plenty more gains over the next 4 to 5 years, given the ongoing developments on reopening and green energy. To get a better feel for how copper has been trading recently, let's now jump into the technical charts to assess what may be in store for the copper market at this stage, with where we are towards the end of April. All right, we are now in the Libertex terminal looking at the technical chart for copper. And just going all the way back, let's jump into the 5-year here. Zoom out a bit. We can see, there we go. We can see that copper is trading at levels not seen in nearly 10 years. And taking a closer look now, let's jump back into the yearly. We can see that copper is possibly primed to break past those previous all-time highs from 10 years ago, potentially into uncharted territory. Now, as we've covered, the bull thesis on copper is largely over a predicted increase in demand and significant supply limitations concerning development expansion, fueled by green energy and the prospects for a rapid reopening and transitioning out of a COVID-related constraints. So throughout the past year, there really hasn't been as much talk or hype about copper, which is surprising considering the phenomenal growth trend that it's been on since the past year. An overlooked trade perhaps, but potentially not for much longer. As copper aims to test and break new highs, the question commodity traders have is whether or not this run-up will continue or if we will soon experience a pullback and break from this uptrend that we're on. Taking a closer look now, let's look at the 3-month. Yeah, so taking a closer look, the most significant point of resistance from here that copper may experience in the short term can be found at around $4.36, which was the high from February 25th of this year. And if copper can make a break past this and hold, the next level of resistance likely to come into play will be one not seen since 2011 at $4.46. And then after that, beyond towards $4.58, which was the high from February of 2011. If the market does encounter some selling or uncertainty, the nearest level of support we could challenge in the short term can be found at around $3.94, which was the low from April 1st, followed by another relatively strong area of support at around $3.85. Failure to consolidate here could then bring the January 2021 low of $3.48 into effect. Now, also looking at the RSI, we have a bit of a warning about this as it's showing potential overbought signals from where we are currently. But looking at the MACD, we get a different story. And throughout the past year, for copper, the MACD has been a bit more accurate. So given the trend, there is certainly a possibility that copper does have more room to run, but for greater confidence, I would probably like to see copper break past some of this resistance before entering a trade to see if the momentum can hold. To protect against a correction, I would look to setting stop losses at some of these levels of support here. But momentarily, however, the case for copper is more of a mid to long-term position. This is appearing to be compelling, but if you're trading in the short term, I would definitely recommend setting stop losses to protect against any pullbacks or selling, since this run that we've been on, since the past year has been quite significant. What are your price targets for copper? And do you think it has more room to run? Let us know if you plan on trading copper in the comments to join the conversation with our community of analysts and traders. If you are interested in trading copper, gold, silver, other commodities, and more, Libertex has everything you need to get started. Simply head over to libertex.com or via the links in the description below to open up a free account without hassle and start trading completely free of charge with a demo account before opening up trades with real money if you'd like. We hope you enjoyed this copper price update, and to support more of the latest content from all corners of the markets and beyond, subscribe to our channel and hit the notification bell to stay sharp in your trading. We look forward to seeing you next time and wish you a great month in your trades.